So we're going to go ahead and get started because it is noon here, Pacific time, 3 o'clock Eastern, whatever other time zone you want to look at, Central 2 p.m., right? Just to cover everyone. As you know, we do this webinar once a month. We actually appreciate the conversation quite a bit because we end up presenting something in the beginning and then we get lots of questions on chat. And it is not a very specific conversation. So it's not talking about education, savings accounts. It's really talking about, three main things, which I'll get into in a second. But as we have people rolling in, I thought I would, as I always do, give you a top 10 or top 8 or top 9 list. Today, it happens to be a top 9 list. So as we're waiting for those folks, today we're going to be talking about purification, zakat, and the resetting of Islamic principles of investing, very briefly on that part. So I thought I would do something on purification. This one is purification of the heart. And so what are ways to purify the heart and become more spiritual? So number 9 is to express gratitude to our creator, to Allah subhanahu wa ta'ala, for his blessings upon us. So actually think about what those blessings are, and that makes us, makes you understand and puts into context what you have compared to others. Number 8, think positive thoughts about Allah subhanahu wa ta'ala. Indeed, having good thoughts concerning Allah is from the perfection of the worship of Allah. Send salawat upon the Prophet sallallahu alaihi wasallam. Allah and his angels send blessings on the Prophet. O you who believe, send blessings on him and salute him with all respect. So that'll get you closer and help to purify your heart. Number 6 is to make dua or supplication to Allah subhanahu wa ta'ala for all your needs. That is a form of worship, as we know, because if you are asking some person to help you with something, that means you believe that they can accomplish something for you. If you're asking Allah subhanahu wa ta'ala for something, that means you believe in him, right? So if you believe in him, that's one of the main criteria of being Muslim. Seek Allah's forgiveness by saying astaghfirullah. Number 4, call on Allah by his beautiful names. And, we know that if you want to ask for relief for health purposes or something, you can, call upon Shafi. If you want, you can call him by different names. Al-Karim for generosity. There's so many different things, so many different names and attributes you can call Allah subhanahu wa ta'ala through. Recite the dearest phrases to Allah. So the dearest phrases to Allah are Subhanallah, Alhamdulillah, La ilaha illallah, Allahu Akbar. Those are amongst the most dear phrases to Allah subhanahu wa ta'ala, so you can do those as well. And then read the Holy Quran with understanding. During the month of Ramadan, many people, complete more pages or the entire Quran in the month, maybe even more than one time. And if we can add some understanding of the Quran as well, there's so many apps now that you can do that with. It makes it so easy. And then the number 1 is to prioritize the 5 daily prayers. This is the best way to connect, and also the best way to purify, or one of the best ways to purify your heart. So with that, now we went from a few people to a few more. So we will go ahead and get started today. I do have, one of my friends and longtime colleagues here with me. We are going to be recording this presentation, and we'll put it on our website for future use. If you go to amanafunds.com/webinars, you'll find it there. You'll also find the Halal Money Matters podcast on that website. You can also find the Halal Money Matters podcast on, an app in iTunes and on Google, Android devices, whatnot. Before we end the session, you'll have a bunch of different websites up that we have referred to, and then you can look at them later on. So as I mentioned, we're going to talk about 3 main items today. One is we're going to do a quick reset about what are the principles of Islamic investing. We're going to talk about zakat because the month of Ramadan is that month that the majority of people say, okay, I need to calculate my zakat. And some people pay it all now. Some people pay it throughout the year. So we'll talk a little bit about that. We'll talk about qualified accounts versus non-qualified accounts, or more specifically, accounts that you have access to without a penalty and those that you don't. And then finally, we'll talk about further purification, even after the zakat purification, even after other ways that, we're following the sharia standards. There is a further purification. We'll talk about that. So the person that we're going to rely on today to do most of that is Monem Salam, who's been with Saturna Capital's Amana Mutual Fund since 2003. He was here in Bellingham, Washington for many of those years. And then he went to Malaysia for 6 or 7 years. And when he came back, he took on some massive responsibilities with Saturna, and we're glad that he did. He's now the executive vice president. He manages 2 of the Amana mutual funds, and we're glad that he does that for us. And he also runs the distribution of the funds, and also oversees the Saturna Sendurian Berhad office in Malaysia. So those are some of the things he does. I might be missing a few things. So he's a busy person. He's also co-authored a book called The Muslim Guide to Investing and Personal Finance. It is an easy to read book. It talks about not only investing, but finance and insurance and other pieces of information that you might find useful. So with that, we're going to go ahead and get started. Bismillahirrahmanirrahim. Alhamdulillah Rabbil Alameen. Wassalatu wassalamu ala Rasulillah. We wish you all Ramadan Mubarak. And soon to be Eid Mubarak. It's only 15 days away or so. So we hope it's going well for you. Again, go ahead and start asking your questions. Monem, I would like to ask the first question, which is if you can just take us through, the basics of what is Islamic investing, and then we'll start to do the zakat and purification thereafter.
Sure. Thank you. Assalamu alaikum, everyone. Bismillah, alhamdulillah, wassalatu wassalamu ala Rasulillah. First of all, thank you for having me on the call. It's always a pleasure to see all of our shareholders, getting on. I think the Islamic investing and can be broken down into 3 different categories. So, and then one after another, and we basically filter out. So if you take the entire universe of global companies that are out there, all of the companies, maybe there's a list of about 10,000 publicly traded companies. Right? And so the first thing we're doing is we're doing a qualitative screen. And what a qualitative screen basically means is that we are eliminating companies that in one form or another are doing something that's the majority of the revenues are coming from haram, right? So we're eliminating banks, we're eliminating life insurance companies, just insurance companies, alcohol companies, pork product, those type of things. We're eliminating those out. And the way we do that is basically through company description. And we look at the company description and look at if there's anything wrong that they're doing, and then we'll just eliminate those out of the universe. And that probably gets us from 10,000, maybe down to about 2,500 or so. And then from there, our second screen is a quantitative. So these are more numbers oriented. And in the quantitative screens, what we're trying to do is make sure that a company is on the financial statement side of it is not exposed to a lot of riba. And so we do that in 3 separate criteria. Number 1 is we look at how much of a company's financings, short-term and long-term, are being done by debt. That's done with a total debt to a 12-month trailing market capitalization. Number 2 is we want to know to make sure that the company is not trading more cash than assets, right? And because if we have more cash than assets, then we have to treat the company as cash. And then we kind of buy it or sell it for a discount or a premium. So that one is accounts receivables to total assets. And the last one, is the a percentage of haram revenues, because there are going to be companies out there whose primary business is in a certain industry, but they might have some ancillary business out there that is involved in something haram. So we want to keep that number below 5%. Okay. Now, this is the criteria that we at Saturna Capital use for the amount of funds. There are other criteria that are out there as well. And there's a paper that I wrote called Evaluating Islamic Screens. And the gist of the paper basically says that it doesn't matter, what criteria you use, as long as it's being done by a reputable scholar or a reputable board, right? They're able to audit whatever you're doing, right? And not one criteria, supersedes another. This is what ikhtilaf, or a difference of opinion, is all about.
Right. So thank you for that reset. Quick question for you. The question comes up every now and then is, why do we have to have any haram revenue?
That's a good question. Ideally it would be, it's more a matter of diversification. So, I think the anecdotal story that I like to tell is, when we first came up with the criteria back in 1986 or 85, when the funds were launched, that we had a scholarly group sitting and one said, I don't want anything, I don't want the financing of the company coming from something haram. And so we went back and looked at the S&P 500, and we came up with, a list of companies that had no debt on their balance sheet. That's possible to do. But then another one said, well, yeah, that's true, but I don't want any companies with cash because cash will generate interest. And if you remember back then, by the way, in the 80s, cash was generating about 9-10% rate of return. So I don't want any interest on my cash. And so when we went back and we looked at the S&P 500, the companies that have no cash and no debt, right? You can imagine how many companies there were. So we try to keep all of these numbers as close to zero as possible. But for diversification purposes in a mutual fund, it's important for us to be able to have some leeway in allowing that to happen.
And that's what we're going to purify. That's the whole purpose. That's one of the purposes of this call.
That is correct.
Okay, so there was a financial advisor, to your point, who asked me a few years ago. I have a doctor here in Houston. He wants to invest only in companies that don't have any debt and they don't have any haram revenues. Can you find that for us? So we looked it up. We went through all of North American companies and we found 7 companies, and 5 of them were financial services. So the scholars, why did the scholars do this? Why did they say we're going to give some latitude? Is it just so Muslims can also participate and build wealth? And was there enough good reason to do that? And do you talk about that in your evaluating Islamic screens? Right?
Yeah, we actually do. And the idea here again is that you have to basically have an assumption that for a Muslim to invest in the market is a general need in the community. Okay, that's the overlying arching. That's what the scholar said, that in order for us to be able to save for our children's education, save for retirement, those type of things, we have to be able to invest in the market. Right? There are other investments out there. You can do a business, you can do real estate, but those usually take a lot of upfront cash to do. Whereas the market, you can start off in our mutual funds, for example, at $250. If you're in a qualified account, $100. So it's small chunks that you can save for the long term. And based on that, basically there's a general need, and that's why the scholars allowed the leeway. But as you mentioned, there was a very criteria over there, and that was that there has to be some form of purification that you're doing on those portion of the revenues of the company that are haram.
So Saturna Capital, when it launched the Amana mutual funds, or actually it was before Saturna Capital. So Amana mutual funds were launched in 1986 after the idea came about in 1984. Paperwork processes were put through. Amana Income Fund launches in 1986. There was no standard. There were no scholars that came together beforehand to say, hey, what are we going to do on mutual funds? So a group of people came together years later through AOFI, right? And you talk a little bit, you actually write about this. And so that's not the only standard, but how different is that standard compared to others? I mean, I think it's minuscule differences, but if you can talk about that a little bit.
Yeah, sure, absolutely. So there are a couple of things there. So actually, AOFI came even later than that. The standard on investing came later for AOFI. The Dow Jones Islamic Index had a Sharia board. They were the ones who basically came up with a criteria that was after ours. So AOFI came about 2 or 3 years later. And remember, the differences are in the margins. They're not in the core. And what I mean by that is, I don't think any scholar or any criteria will say, you know what, alcohol is allowed. So you're not going to find those differences, right? What you are going to find is differences in 2 areas in the financial screening part of it. The first area is going to be in the actual number itself. Is it 30%? Is it 33%? And then the second one is actually in how do you value a company? Okay. So for example, I'll give you both examples of those. So let's talk about the valuation part of it. There are, even amongst analysts, amongst industry professionals, there's different ways and debates on what is a true value of a company. Is it enterprise value? Is it the assets of the company? Is it market capitalization? All of those things are there. So if a scholar takes one opinion versus another based on certain analysts, they might decide, you know what, market cap is the way to look at value. Another scholar might say assets is the way to look at value, right? Nobody will argue that debt is not allowed. So the debt over some denominator, that's going to be a difference of opinion. Okay, so that's the first thing. Number 2 is on the percentages. And again, if you look at debt to assets or debt to market cap, you're not going to get a difference of opinion between, like, let's say 75 and 25. it's between 30, 33, some might go up to 35. And they're just basically looking at it saying, what is an amount that's too much for us to be able to stomach as far as the Islamic criteria concerned. So again, just to reiterate, when we came up with this criteria, we were basically pioneers in this area back in '86. Other people joined later on and said, you know what, you're doing good, but there might be a way for us for us to look at value differently, and that's what they're going to do. And they're not static. For example, the Dow Jones Industrial, the Islamic Index actually changed their criteria along the way, right? And so did AOFI as well. So as they come up with more information, they are willing to adapt and change.
That's right. All right. Thank you for that. I don't see any other questions on this part of it. So we'll move to the next section here, which I think people are waiting for, given that it is Ramadan and people are trying to calculate their zakat. So there's different ways to calculate zakat. There's a rule on 2.5% of the total value of assets. There's a rule about 10% of the gain on assets. So if you could talk, why don't we start off with that, the differences between those two and how you look at that, and then we'll get into it a little bit deeper.
Okay, so let's level set maybe some commonalities first, and then we'll go from there. The commonality is that you have to have wealth in order to be paid zakat, right? Another commonality is with the wealth that you have, at least 1 year, 1 lunar year, or 1 calendar year has to go by. Okay, so if you just came into the wealth, let's say 3-4 months ago, right? This year in Ramadan, you won't have to pay zakat on that. You'll have to wait until next year to do that. So that's kind of just level setting the field a little bit. And then so then you get into how do you value or not how do you value, but how do you calculate zakat? So the other thing that I want to mention is everybody knows, if I ask anybody out there, how much is zakat is owed, the standard answer will always be 2.5%, and that's been drilled into our heads. However, generally speaking, in Islam, there are different calculations for different types of assets. Clear, okay? That there's no difference of opinion there. That a certain type of asset has 2.5, a certain type of asset has 10%, a certain asset might have another formula. Okay, so now the question becomes, right? When you're looking at the stock market, what type of asset it is, right? Is investing in the market akin to owning a business? Is it akin to a productive asset, meaning that you're maybe like something like owning a piece of land that has produce on it? Or is it a non-productive asset, basically just like a wealth accumulator? Okay, and if you can separate those out, and that's where the difference of opinion comes in, then the secondary comes in as to what calculations you're trying to make. So for example, Owais, if you follow, let's supposing the 2.5% up or 10%, you might consider that the stock values, a static wealth. It's wealth you have, you want to calculate on it, so you'll come up with a 2.5%. I might say, no, stock is not a static asset, it's a productive asset, right? You're buying it, the company's using the money to grow operations, hiring people, those type of things. And if I follow that criteria and I say, yes, it's a productive asset, then I would use the 10% of the gains rather than what you're using, which is 2.5. So the difference is not whether it's 2.5, 10, or anything else. Mm-hmm. The difference is what is that asset that you're looking at?
Right.
Does that make sense?
It does, but the 10% versus 2.5%, which one is harder to calculate?
Oh, definitely. I think the 10% would be harder to calculate, and that is because you have a beginning year value, right? And then you have adjustments along the way, right? The increase in value or decrease in value. You have inputs, money coming in, money going out in your own personal account, right. And then you have an ending value. So it's much more difficult to calculate the 10% value rather than 2.5, because 2.5, all it says is, have you had it for a year? Yes, you have. Mm-hmm. What's the value date on let's say the 1st of Ramadan? It's X, and you just take 2.5 for that X, and you basically pay that amount. So it's very simple to do that part of it, and it's a little bit more complicated to do the 10%. And so, go ahead.
Yeah, so I was going to say that we calculate the 10%, and that part of the reason is because it is more difficult. It's the 10% number is more difficult. We're not giving you a fatwa or an opinion that is the way to do it. We're saying that is one of the ways to do it, and so we calculate that for you. if you prefer the 2.5% method, you can calculate that yourself. Very easy to do. So for those people that want to calculate 10%, we have a way to do it. How would they, if you have anything else to add to that, and then how would they sign up for that?
Yeah, so I mean, we have a zakat brochure on our website. You would need to download that, and then there's a form on there that actually gives us permission to do that, and then send you annually a statement that basically shows what your zakat is. And this is done on a calendar year basis. And because it's done on calendar year, we adjust it so that it's not 10%, it's 10.33%. So we're adjusting for the Gregorian versus lunar calendar. Okay.
There's more days, right?
A couple more days, right? And so what we're doing basically is, again, we take your values minus all the inputs that you put into the account, and adding back the dividends at the end of the year. If your value is more than your beginning of the year, then we take 10% of the gains and 10.33% of the gains and tell you what that number is. If there's a loss for that year, then you don't owe zakat for that year at all.
Right. Yep. Okay. Very good. I do see one clarifying question there from somebody, but other than that, no others. So one other question for you. So you mentioned that you have to hold the wealth for a year. This might be too technical, but I'll ask this question. So let's say somebody had $100,000 in their personal account, and that was a year ago, right? And now it was after last Ramadan. So it was after Eid of last year. They had $100,000, and the market actually did quite well after the first quarter. So they're at 130,000. All right. Just giving an example, not guaranteed or anything, 130,000 as of now. So they gained 30,000 without putting anything in there. If you're using the 2.5% rule, they did not have, they didn't have that 30,000 the whole year. Didn't have it in the beginning. So do you know whether that is, because this question comes up too, right? So are they going to use 100,000 or 130,000 to calculate their zakat?
On the 2.5%, it's definitely on your asset value, whatever that asset was at the time that you're making the valuation. So yeah, no matter if you started with 100,000, 125,000, or 75,000, what you're not looking at is what you put in. You're looking at 1 year has gone by and what is the value of on the date that you're calculating on. So it'll, on this particular example you gave, it's going to be on 130,000.
130.
Right?
So
it should be said. I just want to just add one more thing is that, neither of us are scholars, but I think both of us have enough experience answering questions and talking to other people that we can pool our knowledge together and say, this sounds like a good answer. But if you're really looking for a fiqh opinion, it probably would be better to talk to somebody else.
Absolutely. What we want to do is we want to get the discussion going. So you're actually asking the questions about zakat, right? We're not the final answer here. We're just we're just having this conversation today. So, but that's very useful information. Now, a question comes up. Well, I have money in a retirement account. I have, let's say, $1 million in a 401k, or I have $400,000 in a traditional IRA, and I don't have access to that money. I'm 50 years old, or I'm 42 years old, so I don't have access to it. How am I going to pay it? I don't have the kind of wealth in my checking and savings account to pay that, or I do, but I don't want to use it because I was going to use that for something else, right? Whatever the thoughts of people come up. Yeah. So how do we do that? I know there's a number of different opinions out there from scholars in the United States. So how do you come up with the answer on that?
Yeah, so that's again, all I can probably do is give you the different answers that are out there. I think majority of the scholars will tell you do owe money on your 401k assets or your qualified account assets, right? You might find some that say no, but the majority of them will say yes, you do. Okay, but in that yes, there are differences of opinion as well, and what they boil down to is, number one is how much of the money do you control, right? And then number two is how much money are you able to take out from the account itself? Okay, so let's talk about control first. On the control side of it, you have to have 100% control of the money before zakat is due. And particularly what I'm talking about is vested versus unvested, a part of your 401k. So on the unvested portion, there's never going to be zakat due because that's not your money yet. But the vested,
you mean, when you say unvested, just so everyone understands, that means if your employer is matching, but you don't own that matching yet because you haven't worked there a certain number of years, That's what you're talking about with investing
Yes,
versus non-vesting. Okay.
that's correct. So thanks for the clarification. That's correct. And then so whatever portion you own is called vested. Okay. So again, so you're going to pay on the vested portion. But, when you eventually take the money out of your 401k, right, you are going to owe taxes on it. Okay. And then prior to that, if you take the money out prior to your retirement or some other reason, some few reasons, you also owe a 10% penalty. Okay. So what some scholars say is, well, if you wanted to pay zakat on the 401k, there would be a penalty. So let's minus 10% off the value of your vested 401k, and then only calculate zakat on that portion of it. Okay. And some people will say, go further and say, yes, there's penalties, but there's also taxes. And so, we should do it minus the penalties and minus the taxes, and then calculate the zakat on. Okay. Now, each of these, I will say this, and again, it's better to be able to talk to somebody in regards to this. But the idea of, let's take the 10% first, right? And I'm taking a very, it's conservative opinion, like it's better to pay rather than come back later on to Allah subhanahu wa ta'ala and say, well, I forgot, or I did the calculation wrong, right? Because even, if the IRS is unforgiving about it, what's going to happen. So, so the 10% part of it, you don't have to take it out of the 401k. As you were mentioning, you can take it out of your cash flow. You can either, if you have a savings account or checking account, you can take it from there, right? And I know it gets more difficult as the account balances go higher and higher, definitely. But the second way you can do that is there's nothing that says the zakat has to be done all at once, all in Ramadan. Okay, so you can actually, let's say, calculate in Ramadan, right? You make your intention to pay in Ramadan, right? But then spread it out over a 12-month period, because that's the only way you could afford to do it out of you, and not out of your 401k, but out of your cash flow. So that's one part of it. The other part of it, which is on the salary, the taxes part of it, right? I think the one thing you want to keep in mind is, is that if you want to deduct from the salary, deduct from the zakat amount, please do keep in mind a couple of things. One is that you're getting a benefit when you put the money in. Okay, so for example, if you put in $10,000, right, into your 401k, yes, when you take it out, it's only going to be, let's say, if you're in the 25% bracket, 7,500. But when you put it in, you save that 25% when you put the money in. Okay, so that's one aspect of it. The second aspect of it is, what tax rate do you use? Do you use your current tax rate, or do you use your future tax rate? And what is that future tax? All of these things come into play when you're doing that. So it's much more complicated. Not that it's impossible, but it's complicated. So in my opinion, I think it's much easier. I do it the same way, is just to do it on all of it, because it's simpler. Whatever you pay extra on that becomes sadaqah, and Allah subhanahu wa ta'ala will reward you.
Yeah, that's a good method. You're being more conservative that way, and just taking the just in case model, right? Like,
Yes.
What if I pick the wrong thing just because I decided to pick one from a list of different options? So let me pick the one that makes sense to you as well, which happens to be the most conservative one. So if you have, for example, if you have a retirement account with $100,000 in there, and let's say there's no gain the next year, right? So it's 100,000 next year as well in Ramadan. If you subtracted out the penalty and the taxes, you might have subtracted out 30,000 or 35,000 2 years in a row, right? Like you're doing it on the same amount of money 2 years in a row. The other thing is, there is a minority opinion out there that you don't have to pay at all, because the money is not accessible to you completely. It is accessible. Of course, you have to pay tax and penalty, but they'll say, since there's a penalty, it's not fully accessible to you. So, their opinion is that you don't have to pay zakat on it. There's a local scholar in the area, and we talk about this, and we say there are tax shelters. And if you do that with your 401k, you're also making it a zakat shelter, right?
Yeah.
You're sheltering your money away from giving it to those in need, because you put it into a 401k. People could start to use that strategy and say, let me put as much away as I can in these qualified accounts, so I don't have to pay zakat. There's going to be a portion of people that do that. So definitely reach out to people that you might know. Take a class on zakat, but take maybe more than one. This is an important topic. It's one of the 5 pillars of Islam. So, it definitely takes us doing more. Another personal thing I'll mention to everyone is that, many years ago, I decided to get a spreadsheet, Excel spreadsheet, and put in every donation that I make, right? Sadaqah, zakat. And luckily I did that, because then I would look at the balance as well. I'd say, okay, let me list on that spreadsheet on the bottom how much my 401k has, how much this has, everything. And then I calculate the percentage, and throughout the year, then I'm just trying to hit that number that I need to pay. And so you can go back and look as well when you're doing your taxes and say, hey, did I get a donation receipt for all of those donations I made, so I can input those into my my tax filing. So it helps you there as well, but really it gives you peace of mind that you paid the right amount of zakat, because you don't want to owe that piece. It's kind of like, if you couldn't make a prayer, you couldn't pray Fajr in the morning, you have to make that up. It's the same thing with zakat. If you have not paid that in the past, it is an obligation. So take it as seriously as you do with other things, just like fasting.
True. And there's two things that I want to mention. And some people might argue, wow, it's so complicated and I have to spend a lot of time on it. Yes, it is, but so is the IRS. When you file your taxes with the IRS, there are rules, there's exceptions, there's different things. But there's a difference between calculating your zakat and calculating your taxes. And that is the time and energy you spent on calculating zakat is an ibadah for you. Right? And you're going to get rewarded for it. So take the time, think of it as an ibadah, right? And just make the best decision that you can. The second thing that I want to mention is, yes, the large balance is there. And as we talk about often, always, not every year the market does not go up, right? So if you're using our methodology of 10%, right? Even in those years that you have a loss, right? Take some money and give away in zakat, right? So that when you have a larger gain the following year or 2 years from now, whatever it is, you have already paid some zakat in advance to be able to kind of offset that as well. So that might be another way to be able to look at how to pay off large balances.
Yeah, my understanding as well is that you can prepay zakat for a future year as well. So just keep those numbers in hand, and then that will make you even to the standard you're supposed to get to. Haytham did put a link on the chat about the zakat brochure and application. You can sign up to receive the calculation if you'd like. It'll be at the beginning of next year. We'll give it to you. So it'll be sometime around February. We'll send you your individual list of accounts, how much went into each account, and how much the zakat due would be at 10.3% for the full calendar year. And then you can choose to use that, or you can use your 2.5% using those same numbers if you wanted to, or you can wait till Ramadan and calculate 2.5% on the value of your accounts at that time. So you can use this as another sample of how to calculate zakat. It's an easy form to fill out, but you can also take a look on that link. It just tells you exactly what Monem was talking about. What is the formula, right? So if you're more interested in this and you want to learn more about it, do you talk about this in your book as well?
Yes, we do. We do talk about both of the different calculations, not as comprehensive because the book is an overall perspective, but there is a section on there regarding zakat as well.
Muslim Guide to Investing in Personal Finance. So people can do that. I know we were giving those books out for a while, and we might do that again. We were doing that on some of these webinars as well. When whoever was on right when we first started, we said, we'll mail you a book. Once we get some more books, we might do that on a future webinar as well. Let's quickly move to purification. Further, I'm calling it further purification because zakat is also a form of purification of your money and your assets. So tell us about what Amana Mutual Funds is doing with this further purification of your money.
Okay, so one thing to keep in mind is zakat is something that's obligatory. It's an ibadah, those type of things. Now we're going to get into a section which is more regarding Tawbah as a repentance purification rather than an act which is an ibadah. Okay, so we're kind of shifting the focus a little bit from there. So as I mentioned to you earlier, when we're looking at companies that we're investing in, there are going to be some either revenues, assets, those type of things that are from a haram source. We're limiting it to a low number, but that doesn't mean that it doesn't exist. So we do have that. And so what the scholars have said, right, is that that portion of the revenues or the income which is coming from a haram source needs to be purified. Okay. Now there's conditions there, and we can get into that. But the overall general idea is that portion of it just needs to be purified, and that purification is because you did something, because you invested in something that's haram. That giving away of that portion of it is more like a tawbah, it's a repentance that you're doing for being involved in something that you should not have.
Okay. And so what is how is Amana Mutual Funds calculating this purification?
Sure. So let's kind of look at it from a historical basis. So initially, the Amana funds, we do have an expense ratio, and so what we always felt was that because we're trying to limit all of this exposure that we have to haram, the actual number of the what you need to purify is typically going to be very, very small. Okay. And so what the scholars, our Sharia board at that time had mentioned to us was that as long as the purification is lower than the expense ratio, then you can consider that part of your purification and you don't have to do anything more.
Okay.
Okay. So that is an opinion. However, we were getting some demand from our shareholders saying, yes, that might be the case, but we would also still like to know what that amount is. And so what we did was we actually came up with a way for us to be able to calculate the purification number, right? And then be able to publish it on our website. And I think Haytham just put up the link for it. But what happens is you input the number of shares, right? We are the ones who calculate the per share value of the purification. And then if you multiply those together, you get an amount that you need to purify. Okay. Now, there are some overall rules. If you don't mind, I'm going to get into that a little bit now always. And that is that, what part do you purify, right? And the scholars, from my understanding, pretty much all across the board are of the opinion that you purify on dividends, but you do not purify on capital gains. Okay, whether realized or unrealized. Mm-hmm. And I'll get into that a little bit. So when you look at dividends, let's supposing a company pays 32 cents in dividends, right? And we know, like, for example, let's say 1% of their revenues are coming from, or income is coming from a haram source. Okay, so you can easily translate back and say 32 cents, 1% haram, 1% of 32 cents is X amount, and that's how much we need to purify. Mm. And it's a direct relationship. It goes straight to the bottom line of the balance sheet, income statement, and you can pay it out, right? Capital gains is a little bit more tricky, right? Because you're trying to find that exact source. What the scholar said is, the capital gains, why is the stock going up, right? Is it going up because of value in revenue of the haram sources are increasing? Is it just sentiment of the investors? Is it some acquisition they're making? They really know you can't pinpoint why is the stock rate rising in value. So that's why, because you cannot attribute the number to capital gains, a majority of the scholars have said you don't have to purify on capital gains, but only on the dividend side of it.
Got it. Okay. So, I think that's it's an easy way to do this on the website. I've used it myself. You just put in the total number of shares that you own, and it tells you how much you owe. It's actually a very small amount. Why is it so small, the purification? I get that question too. Why is the number so small? Is this really accurate?
Well, so the reason why it's so small is because we're trying to limit the exposure. It's not, you don't want it to be very big, right? Because that would mean we're doing more haram and you have to purify more haram. So right. The smaller the number is, the better job we're doing in managing the money according to Islamic guidelines. Again, that number, except for one fund, and that's a trick question for you, it's except for one fund, that number will always be greater than zero. But which is the fund, which is always going to be zero, and we don't even put it out as a calculation on our website.
Right. It's the only non-stock mutual fund that we have.
That's right.
Participation fund.
Right. And the reason why we don't have you purify on that is because the instruments that we're buying are already 100% halal. So there's no purification involved. So there's nothing to purify on that. So you can do that on the other three equity funds.
Okay. And then the numbers there are not going to be static. So for example, if you put in that you have 100 shares today, and then you come back to that website 3 years from now and put in 100 shares, that number is going to be different because we reset the calculation on the fiscal year. And I believe that's May 31st.
Correct.
Okay. Very good. Do you have anything else on purification?
So the only thing that I would say is it does take us probably until August to come up with a number. And the reason is because we want to base the number off of audited financial statements, not just off of unaudited. So, we go through the audit process, we do all of those things, and then we publish the number, so there is a lag time. So it's not like June 1st, you'll have a number. But if I think you'll find that's a very easy tool to use on our website. and I encourage people to take a look at it.
And by the way, I mean, the numbers are not going to change too often, or too much, I should say, even when they do change once a year. And the reason is that we don't make a lot of changes. We don't make wholesale changes on our in our different funds. So we're not selling, 30% of our holdings every year and buying 30% new holdings, right? We're pretty much keeping those companies that we believe still have, more ability to increase in value, and they're still Sharia compliant. And we might add some things here and there. We might chop off a little bit here and there. It's not going to change vastly.
Correct.
So that's something for people to keep in mind as well. And it is a further purification. So you have the zakat purification. You have the scholars telling you that it's okay to use these standards. And then we're saying, even with all of that, we're going to further purify by figuring out how much haram revenue there might be from dividends being paid. And then you can make that payment. So is that sadaqah or zakat you're giving when you're purifying?
So yeah, that's a good point. So the two things the scholars have said. One is that you cannot consider it sadaqah or zakat. There has to be the tawbah. And what that means is there's no benefit that you can derive from it. Okay, so what that means, you can't take a tax write-off on it. And you can't, so you can't take a tax write-off on it. The other thing that they said is you should be spending that money on the general good rather than on individuals. So you cannot, for example, feed a fasting person with this money, right? But the general good would be, for example, a water well that everybody can benefit from, or a bridge that you need to bring. So those type of general use items, you can use this Toba money on, but you cannot use it on individuals, and you cannot take a tax write-off on.
And again, the number is quite small just because of what we all talked about. So fortunately, it's not a huge amount, unless you have, thousands and thousands and thousands of shares, which might be the case with some of our clients. Mm-hmm. We do the calculation if you hold the accounts with us directly. If you hold them somewhere else, we can't see the ins and outs. So you can just use our calculation from our website. The link is on the chat group, as we mentioned. So feel free to go into your account that you're holding somewhere else. For example, there's many people on the call today that might have a different employer, and that the employer might be a tech company or a hospital or an attorney office or something. And so they allow you to purchase the Amana mutual funds through a brokerage account. So if they do that, you might have shares there. You can just figure out how many shares you have and come purify it. If you want to figure out the zakat, you can also use our methodology, the 10% number, or you can use the 2.5% number. All right, so does that bring up anything else that you want to close out with, and then we'll ask for final questions?
No, I mean, I think the most important part of it is that it's important to remember that that the differences of opinion that you have, whether it be in zakat or even on Islamic investing criteria. First of all, it's not on the actual numbers itself. It's not fundamental difference. It's actually, when somebody says, well, I have to pay on zakat on my valuation. Well, the difference is on how do you value. It's not on whether or not you have to pay on the valuation. And so that's the one thing really keep in mind. And the same thing goes for the Islamic criteria side. The differences of opinion are on the margins, right? And they're not on the core fundamentals of it. And there's one more thing that I wanted to add, if we have some time, and I'll make this really quick. And I think this is quite innovative on our part. And what we're trying to do is we're trying to incorporate our environmental, social, and governance screens into our Islamic criteria, right? And if you look at the criteria we have right now, the Islamic one, they're more negative based, right? We don't do this, we don't do this, we don't do this. But on the positive side, on the ESG side, what we're trying to do is, try to invest in companies that are being more efficient with their water, are being able to reduce their greenhouse gas emissions on the environmental side, taking care of their employees on the social side, and then having good governance practices on the G side, right? And a lot of these have a rooting or fundamental rooting within our tradition, right? So for example, if you want to talk about water usage and recycling, right? One time one of the companions was making a wudu on a wudu, and the Prophet ﷺ said, don't waste water. And it said, and the companion responded back and said, can there be wastage even in wudu? He said there would be wastage even if you're making wudu at a river. Right. And so again, those type of hadith you can look at and be able to come up with those. So, traditionally we've done the forbidding the evil, And I think with the ESG criteria, we have added the enjoining and the good.
I think that's actually a good place to end. If people have further questions and there was something that they missed, please ask that question to me. I'll be happy to answer. There's a question here. Do you have any advice for those whose employer provide a 401k for their employees, but which has very limited investment options? Do you know any religious exemptions? So what you could do, the first step is to go to your employer and ask them to start up a brokerage account. And half of the 401ks in America have a brokerage account already. If they don't have one, they can easily add a brokerage account. Then you can buy multiple things, individual stocks, Amana mutual funds, what have you. I give a quick example. Some of the technology companies, they have large Muslim groups, and it took 2 years plus for those companies to say, all right, we'll go ahead and give you a brokerage account so you can buy the Amana funds or what you want to buy. But there was a doctor that came to me. He is part of a 6-hospital group in New York. He came to me in December, and he asked me this question that Justin is asking here. And I told him, this is what you can do to add a brokerage account, call your employer. And within a month, he called me back and he said, hey, they did that. Now, how do I buy the funds? So, sometimes it takes very long. Sometimes they listen and they do it like that. So imagine the good that person initiated, because all of the employees later on, the existing ones and the ones that come in the future, will be able to buy something that is according to their faith principles. I hope that answers the question. And if, again, further questions, please email me. I'll be happy to direct you to the right place, or if I can, I'll answer the questions. One of the things that I'd like to solicit from you all is let us know what else you'd like to talk about. So whether it's this webinar, because this really is for all of you, right? We give out this information, then we house it on the website, and let us know. And then there's the Halal Money Matters podcast that Monem host with Christopher Patton. And if you have some thoughts on what we could do there as well, something that you've always wanted to learn about or get deeper into on Islamic finance or investing, or, we did one that was like one of the best viewed ones, the webinar, and that was estate planning, living trust, wills and preparation for the inevitable, as we called it, right? So that one was one of the most viewed. It's on our website. We do thank you. Monem, we thank you for being on. I thank Haitham and Rachel for assisting today. And then we thank all of our share owners for being on. We value you being on, for, asking us questions, giving us feedback. And we get feedback. Our team gets feedback throughout the year from our clients, and we go into detail with them. And we'd love to do that with you as well. Please spread the word about what Islamic investing is compared to the alternative, because we need to clean up our money as well in this life. And then with the wills and trust, we need to clean that up and do the right thing for our afterlife as well. Final thing, somebody asked about the Monem's book. It is called Muslim's Guide to Investing and Personal Finance. Maybe at a future webinar, we will have some for those that join on time. We thank you very much, and Assalamu alaikum wa rahmatullah.
Please consider an investment's objectives, risks, charges, and expenses carefully before investing. To obtain this and other important information, which you should carefully consider before investing, about the Amana funds in a free prospectus or summary prospectus, please visit amanafunds.com or call 1-800-728-8762.